2. Welcome to another episode of Million Dollar Stories, where we get to interview authors from all over the world. If you're listening to this podcast, you probably want to increase your net worth, your cash flow, your finances to some degree. And I think you're in luck for this next episode. We're talking all about day trading. We have an individual who wrote a book who has many reviews on Amazon. So if you're looking to figure out a new way to make some money, or maybe dive a little bit deeper into the day trading world, this is the podcast for you. The book that we're talking about is called Day Trading for Dummies: Business and Personal Finance. And the author is with us today, Annie. Well, it's Ann Logue on the book, but
Mhm.
she'll go by Annie Logue today on the podcast. Thanks so much for being here.
Right. It's Adlug if you want to write me a check.
Yeah, that's the way to go. Nice. Excellent.
Yeah.
So
Yeah.
thanks so
Yeah.
much
Yeah.
for being here. And maybe if you can kind of give us some background on you and maybe the genesis of the book.
Okay. I have a, very traditional financial background. Went to have an MBA, worked for an investment bank, all that thing. But I always really liked talking to traders. I was a research analyst. I loved that. I loved writing reports. I loved doing research. I loved talking to people. But I always really liked the traders because they had such a completely different view of the world and they were so straightforward. There was no bullshit, there was no games playing. What they said went. And I just really liked and respected that. And so Wiley actually approached me to write the book. I had earlier written Hedge Funds for Dummies for them,
Hmm.
which fit perfectly the kind of background I had. And with this one, I had to go out and talk to more traders. And it was really fun. And I learned a lot, and I put that in the book so that the readers can learn what I learned. Um, and the key to successful day trading is discipline, 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 discipline. There are a lot of other ways to make money. There are a lot of other ways to spend your time. People who are good at it, people who enjoy it, it's fantastic. But it's not for everybody. And I think that's the first key message of my book, which is if you're not cut out for it, do something else because it's a very expensive way to find out that you're not cut out for it, right? People lose a lot of money day trading. People make a lot of money day trading, but it's not always the same people. But I think the successful traders. The first thing is they have a money management plan. And the simplest plan was one that was developed by a trader named William Gann. And it's still very popular and it's super easy. And it's that you never put more than 10% of your money on any one position.
Oh,
And that way, you've got enough money for at least 10 positions. And that way, if one of them falls apart or even two of them falls apart, you still have money to stay back in the game. And a lot of people think that if you see a sure thing, you should just put all your money on the sure thing, right? But things go wrong all the time. You might put all your money on that sure thing and make a mistake with the order entry, and then it falls apart. It is as easy as that.
well, I have a client who wrote a book with us, and it was all about day trading. And the
Mhm,
way he was able to put it together, he made the analogy that it's very much like golfing. And he has this thing called the tee box, and he was able to analyze graphs and make
mhm.
decisions without emotions being involved. And it was
Yes.
really scientific. And I found that so fascinating. Now, his strategy was not to become a millionaire overnight, but to make a quick 5, 10, $15,000, whether it's week to week or day to day.
Mhm,
And I had another person come on this podcast who I did not work with, but he works with the top 250 richest families in the United States on average,
mhm.
somewhere in there. And he says, invest like a dead man. What that means is most people who invest and then forget about it, if they look at it 15, 20 years from now without touching anything, there is a much more likelihood of them having way more than if they did analyze it from day to day. So everybody has their own strategies. I think it comes down to personality, risk tolerance. And I think what you said is like the vision of how you want to live and what you want your money to do for you. Is that
Mhm.
right?
That's a lot of it. And a lot of it is personality. One trader I talked to said that day trading is video games and psychology.
Man, is that good too, right? That's spot
I
on.
know. And so, like, if you are able to be unemotional, to control your emotions, and that takes some psychological, some people are better at that than others,
Yep.
right? And if you're pretty good at video games, like if you're able to get into a game and get to the next level without getting too emotional, without getting too wrapped up, with just being able to respond to what you see on the screen, then you are somewhat more likely to be a good day trader. I'm not cut out for day trading. I don't day trade.
Wow.
And I know that. And that's why when I did this book, I interviewed tons of day traders. Anytime I find one, I'm always like trying to pick their brain because this is the fifth edition. So, always trying to get always trying to get new information from them. But it's, again, the successful ones, that's consistent, that they have control of their emotions. They can respond to what they see in the screen and not create a backstory about what they see, that they're disciplined about their money management, and that they track their trades and go back and try to learn from it.
Mm. Well,
Another bit of advice that I've heard, which would also, I guess, would relate to golf in a way, but it's just like the way to do paper trading, or most brokerage firms allow you to do practice trading. I guess it hasn't been paper for 20, 30 years, but is to practice order entry, because it's easy to make a mistake. There's a lot of things you have to specify. You have to specify the contract or the stock. You have to specify the number of contracts or shares, the size of your position. You have to specify the type of order you want, when you want the order executed, your stops, your limits. It's really easy to make a mistake with those things.
well,
So one trader that I know said that people should practice entering 20 perfect practice trades. And when you can do 20 perfect practice trades in a row, then you should start trading with your own money. And
wow.
the emphasis again is on being able to do the order entry correctly. And this is really process driven, and it frustrates people when they hear that, because they're like, I just want to go in and I just want to like tap some things on my phone and be like that guy who destroyed GameStop, blah blah
Yeah, of
blah.
course.
And it's a little harder than that. And again, some people are better at that kind of process than others.
Oh,
But that's like a good way to just start and be like, okay, can I do this? Can I sit here and try and do 20 practice and do 20 trades without making a mistake in the order entry? And if you do that before you trade with real money, then you're going to be better off when you actually commit your own funds.
wow. And doing practice trades would be frustrating if you do really well, if you think about it, right? Like,
Yeah.
if I would have put money into this, I would be really rich right now, right?
Right,
So
right,
that could
right.
be frustrating, but you said it right. It's just you have to be, and I think maybe it's just practicing at such a low level that
Mhm.
maybe you have the emotional control not to do something stupid, right? So,
Yeah.
man, I never even thought about that, to be honest with you. Like I figured the way you learn is through the school of hard knocks, very much like on entrepreneurship. But
Mhm.
it is very smart to just do 20 trades in a row that you know you're doing something right. Therefore, you have confidence
Right,
and you have the emotional control to keep it in there or to
right,
pull it out whenever you start to see it go south.
right. And every broker that deals with day traders offers practice trading.
Hmm,
And so
excellent.
take advantage of that.
Guys, look into that. I've never even thought of it, so that's a great tip. One thing I want to get into is it's in chapter 3, defining a good day trading asset. If you could
Yes.
give us some things to look out for, because I believe most people, the average person, doesn't even know what an asset is. I
Yeah.
used to think it was just something that you owned. Rich Dad,
Mhm.
Poor Dad, Robert Kiyosaki. showed me that it was something that paid you. And I think in the
Mhm,
subchapter below this, you talk about liquidity and potentially
mhm.
cash flow. So tell me about this. What is a good day trading asset?
A good asset for day trading, again, you're going to buy and sell it. So it's going to be a slightly different definition than Robert Kiyosaki because you're not going to be generating any income from it because you're not going to hold it long enough. But you want something that you can get that's you can buy because there's a lot of things that aren't liquid out there. You want something that you can get in a position that suits your account size. You want something that's volatile because that's where you get the opportunities to trade. And so a lot of this becomes, tech stocks, volatile types of securities, small cap stock, some small cap stocks. A lot of small cap stocks don't have the liquidity. So people will have more opportunities if you're day trading Nvidia, for example, than if you're day trading other things. Just because over the course of the day, there's some up and down volatility in the price. Um, you also want something that you can get again in the kind of size that you have. And the options exchanges, for example, and the commodity exchanges have developed a lot of mini sized contracts to make it easier for day traders to get in and trade, futures on the market, futures on different commodities, futures on interest rates. And those are really designed for small traders, for day traders. But the Chicago Mercantile Exchange, the Chicago Board of Trade has developed a lot of great contracts. Those are very popular. It's hard to trade a lot. You can't really day trade bonds, but you can trade interest rate futures.
Hmm.
You can't really day trade real estate. You could day trade REITs, but most of those don't have enough volatility. You may be able to trade a lot of ETFs on these. Some of them have enough volume and enough volatility that you can, trade because those are designed for intraday trading.
Hmm. Now, after interviewing all these people who
Mm-hmm.
are really in this game and they love it,
Mm-hmm.
right? This is their
Mm-hmm.
passion, this is their strategy for life.
Yeah.
So,
Mm-hmm.
have you noticed any type of trend? Are they a certain type of individual? Are they just cool, calm, and collected? Like, what is it about these people that you've noticed?
They can be cool, calm, and collected when they're trading. They're not always cool, calm, and collected when they're not trading.
So they're out there. I've noticed. I was wondering if it is these people are they're wild. That's what I realized. Right? They like maybe it's the dopamine hits, the action, right? Maybe that's what it is. There's something about the manual effort daily that keeps them
Mhm.
going, right? It's almost
Right.
like it's just like a cylinder or like a piston where it's just constantly going and they need it. Is that right?
There's some evidence that a lot of successful day traders are bipolar.
Wow. Yep.
And when they're on a more manic phase, they're able to they're better traders. They're able to focus better. It works with their condition. It doesn't work so well if they're in a depressive phase. But
Got it.
there is actually some evidence that this is a way that people work with their condition.
So I believe it doesn't fit with my personality. I like to
Mhm,
build something and then it gets stronger and stronger
mhm,
with less effort. So it doesn't fit my personality, but I understand it. There are certain things that pop up that I realize like, ooh, that would be amazing to get into. Number one, I believe in the company, or I believe in the person,
mhm,
but I still don't want to have to worry about it 3 weeks from now to make that decision. So it's very much like crypto. Now I have some
mhm,
crypto and I believe it's going to be something that maybe the next generation is really going to reap the rewards from. So I
mhm.
think it's going to be great. But as of right now, it seems so speculative that cryptocurrency and day trading to me are pretty much one and the same. And I believe the cryptocurrency is disrupting the day trading world. So you have a
Mhm,
chapter on this. Can you
mhm.
kind of just share what you believe the future has for us when it comes to both of these happening at the same time?
Well, to some extent, it doesn't matter what the future of crypto is if you're day trading because you're only looking at what's happening now. You don't have to make that bet about, what's going to happen. Is the Fed going to do their own currency? What's the SEC going to like? You don't even have to get into that. It's like, what do you see here now on the screen? The other interesting thing is that because the fundamentals are so unknown, you have to trade off the charts. And that's really true for any day trading because when you're just looking at a day, you're looking at that volatility for that day, and the long term fundamentals don't come into play,
Mm,
right? It
yep.
doesn't matter if NVIDIA is a good company or a bad company. It just matters that there's volume and activity, and you can get into it and ride it up or ride it down, depending on what you see in front of you. And I think that that's the same with crypto. Um, what are you seeing on the charts? Does it look like there's momentum? Can you ride that momentum? Can you place an order that, protects your position? Get in, get out. So I think you're right that there's a lot of overlap between crypto and day trading. And I think a lot of it's just because it's an asset that's good for trading, period.
Yeah.
I didn't mention currencies actually when you asked me that, but currency has long been a really good asset for traders because there's always activity every day, people buying, people selling. For international trade, you have just enormous amounts of people buying and selling dollars and euros and yen every day. So that creates a lot of activity for a trader.
So, I mean, whenever it comes to starting a business,
Hmm.
usually, I mean, I just look at risk equals reward. And I think
Hmm.
that maybe that phrase really lends itself to day trading, right? If you see
Yes.
something that's extremely risky and you have the emotional control and the ability,
Hmm.
the resources to
Hmm.
invest in it and land it right, you're going to have an incredible return. And I don't know if you're into the world's or the world of it, whether it's just buying or
Hmm.
setting up puts, but there are certain strategies where you might have a little bit of an understanding of history of whenever you expect something to happen, and then therefore
Hmm.
you expect another thing to happen. So having some type of historical reference might give you an advantage, but there is always going to be risk in anything because the
Hmm.
future obviously hasn't been written yet. So
Hmm.
whenever it comes to riskiness, you have a chapter on this, increasing risk and potential return with short selling and leverage. There's a
Yes.
phrase, it says, understanding the magic of margin. Can you
Yes.
kind of tie all that together and say how if you can manage if it's the riskier, the better, or the riskier, usually the scarier, maybe?
Well, I mean, yeah, with risk you have increased risk gives you an increased rate of return, but it also gives you an increased rate of loss for any particular trade. That's one of the reasons why you want to diversify your trades. Why, if you follow the GAN system, for example, you never put more than 10% of your money on any one trade, right? Because then if you have 10 positions and one craps out, two crap out, you still have the others there to make money. You're still there to keep playing. And I think that is the first key part of risk management. The other thing is that margin, like a lot of these things, these assets, when you're talking about the course of a day, they tend to have relatively small moves. Like currency, you might see the difference of a penny or two or three between the dollar and the yen today, tomorrow, whatever. But if you're using borrowed money, which is what margin is, you're borrowing money from your brokerage firm and then you pay them back. And that gives you, a greater return on your position. Um, it does increase your risk because you have to pay the loan back whether the position works out or not. But day trading, to be successful, most traders find that they need to use leverage because they have these relatively small positions and they're looking at relatively small movements over the course of a day. I mean, from one day to the next, NVIDIA isn't going to change much in price, right? From 1 year to the next, the change is enormous. Um, but you need to sit there and say, okay, I'm just trading today. I'm closing my positions out at the end of the night, which, by the way, is a significant way to reduce risk, because then you don't have to worry about overnight surprises, which
Mhm.
happen all the time. But you're just focusing on managing your risk during the course of the day. You can use leverage, you can use margin trading to increase your risk, but you use other things to try to decrease the risk. And a lot of that risk is the risk of your own error or your own emotion. So again, that's limiting the size of your position, your capital, to allocating no more than 10% of your capital to a trade. Um, entering orders with stops and limits so that the brokerage automatically closes you out if the thing goes up too much, goes down too much, takes a lot of your emotion out of it. And you mentioned like trading as a business and entrepreneurism.
Yeah.
It is a business, and it is helpful to sit down and set forth some kind of a plan. Like, this is how much money I'm going to commit to my trading. This is the time of day or the days of the week I'm going to trade. This is what I want to learn, and take notes. Successful traders keep trading journals. Some write things down in an old notebook. There's a lot of online trading journal systems now. Some brokerage firms offer them, but that help you track all your trades, and you can enter what you were thinking when you made the trade, whether or not it worked out for you. And you can go back and you can start to see what works well for you, where you have biases that might be interfering with your trading, and you can learn from that. And that is something, again, it's that business-like approach that works for a lot of people. And if you can do that, if you can keep those records, follow that, you're going to be so much better off.
Hmm. Now, in part 2 of your book, you talk about, I guess, the research behind certain
Mhm.
positions that you take.
Mhm.
And whenever I was in school, I went to Duquesne University. I was a
Mhm.
finance major. We would always read the quarterlies. I think that was
Mhm.
really like the big
Mhm.
thing that we focused on, to see what was happening with the management team, who was behind it, what moves were they about to make. That seemed to be like the number one play from what I remember. So
Mhm.
in part 2, what would you recommend if anybody wants to get into this? Where do they look for research? Do they look at the historical data? Do they start to do the quarterly statement reviews? What do you recommend?
Don't do the quarterlies. Don't do
Not for
that
day
kind of
trading, huh?
research. Not for
Okay.
day trading. I mean, again, I love that stuff. That's one reason I'm not a good day trader. Like, I
Yeah.
want to know
That's long.
everything.
That's longer term. Am I right? That's buy and hold strategy.
That's buy and hold strategy. That is definitely longer term. That's assuming you want to own something for more than a day or a
Got it.
couple hours or half hour or whatever.
And yeah, just to be clear about this,
Mhm.
whenever I heard day trading, I would think you're just active day to day, but you're talking about in and out within a matter of hours, right? On
Right,
one position. Is that
right.
correct?
That
Great.
is the technical definition.
Got it.
So the kind of research you would want to do would be looking at different kinds of trading systems, looking at different kinds of chart systems, trying to learn different chart patterns and systems. Having some understanding of the asset might be helpful, because it might help you learn like what's going to come up and surprise you, or what starting your day by figuring out what kind of news announcements there's going to be that might affect your position. Like, when are earnings going to be reported for the company? When are earnings going to be reported for big competitors? Is the Fed going to be announcing interest rate changes? Are we looking for big economic announcements like the producer price index or the CPI or employment? These are things that, depending on what you have, can create volatility in the middle of the day and affect your position. And that creates opportunities. So that can be good. It can, also help you avoid surprises. When you're sitting there, you're looking at charts, you don't understand what's going on. And it's like, oh, well, the Fed made an announcement, you know. Um, like, there's things like, yesterday we had or yesterday, 2 days ago, the collapse of the bridge in Baltimore. That affected a lot of prices for certain companies, certain securities, certain industries, certain commodities. If you knew that before you started trading, you would have a better understanding of what you saw,
Wow.
right? If you just
Yeah.
started trading and didn't even scan the headlines, you'd be a little behind. So that's the kind of research that day traders need to do. A lot of day traders are holding, they say they're day traders, but they're holding things for longer time periods. Swing traders usually hold things for a couple of weeks. There's a lot of people who, their time horizon is maybe a month or two, or when it goes up, when it hits their price target. There you might want to do more research. If you're looking at a stock and you're like, well, I think it's going to go up. Let me see if it's going to pop in the next month. You might want to take some time to see if there's something happening, something that's likely to drive it in the next month, one way or the other. And that might be looking at the last quarterly report. But then you start getting more into longer term investing. And that is a key point that I hope I made in the book, that I want to make here, is that if you're not cut out for day trading, don't panic. There are plenty of other ways that you can make money in the financial markets. There are plenty of other things you can do. I think a lot of people think that that's the only way you can make money,
Hmm.
you know.
Well, this is the year of chaos, I believe,
Oh yeah.
2024. From what I have understood about election years, right? It's
Yeah.
pure volatility. But here's the thing.
Yes.
This year, there are more elections in the world than any time in history, which is insane.
Yes.
I believe it's over half the world has an election.
Yes.
So how does that either help or hurt this strategy?
That's going, if you're looking at playing global elections, a really good way to do that is currencies.
I would assume, yeah. It's
Yeah.
especially with what's going on with Russia, and I
Mhm.
believe they were at what 90% of the currency that they were using what for trading oil was like was it in using the US dollar? It's down to 30%. So
Mhm.
something along those lines. I mean, that's
Yeah.
all obviously changing the
Right.
game right there.
Right. Right. I mean, the US oil prices are denominated in dollars. So there's a
The
lot of
petrodollar, that's what it was called, right?
yes.
That's how it's, yep, there you go.
Yeah. There's a lot of arbitrage trades that happen between oil prices and the US dollar. So they're very closely related. Um, but yeah, if people are shifting to other currencies, currencies are priced like anything else. If people want to do more business in country X, they will need to buy more of that country's currency. If they are less likely to do business in that country, they will sell that currency. And the thing about currency is, for every currency you buy, you're selling one, right? So if you want to do more business in Europe, you sell your dollars to buy euros. So you've got a short trade on the dollar side and a long trade on the euro side.
Hmm.
So there's currency can be a nice market for people who want to play global volatility. And again, it could be a nice market because there's a lot of activity in there. You don't have to worry about not getting a trade. Most currency trades happen with leverage. My big advice for people who want to trade currency, though, is to make sure you're dealing with a brokerage firm that's licensed to operate in the United States or whatever domain you're in. There are a lot of online brokers that are operating off overseas in currency. They're often not well regulated. You often don't get your money back,
Wow.
or they
Yeah.
let you take risks that you shouldn't be taking. Like I'll see on message boards, people will be like, well, I got a VPN so that I could trade and, I could get an account. I'm like, no, 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 that's stupid. You're just like throwing your money away.
And why? Because none of that matters. It could be it could be shut down at any point, or
Right. There,
you're
there's a
actually
couple.
breaking certain laws in certain areas?
There's a couple things. One is that a lot of times those brokerage firms allow people to take way too much risk and then they bust out. Number two is that sometimes they're scams.
Hmm.
Number three is that sometimes it's just very difficult to get your money back because you're dealing with a mark, you start getting into regulatory issues about repatriating your funds. So you
Wow.
have a lot fewer protections. I mean, if you're talking about a brokerage firm that's headquartered in Switzerland, you're probably okay. If you're talking about a brokerage firm that's headquartered in some little strange offshore banking island that you've never really heard of, you should be nervous. If you're thinking about, yeah, if you're thinking about getting a VPN just so that you could deal with whatever brokerage firm, you should be nervous.
Oh, gotcha. Is there a
Mhm.
software program or a brokerage that you recommend? Because you don't need to be licensed to be a day trader. You just need to have the brokerage that has the licenses. Is
Right.
that right?
Yeah, but there's no particular brokerage firm that I recommend or work with because I approach this very journalistically. There are a lot of good brokers out there. And most of the major brokerage firms have a lot of good services for day traders. So I guess I'm going to name names just because it's off the top of my head. Schwab has a lot of services for active traders right now. Awanda specializes in currency. Um, but there's a lot out there. I don't like some of the I don't like trading on phone apps. Let me say
Got it.
that.
You mean like from what I know who you're talking about, we won't name a
Yeah.
name, but I know you're talking about some of them are very popular. Some of them got into trouble recently with what happened in the past and yeah, kind of stained
Right.
them.
Some of them because they're really dependent on some smaller brokerage firms are really dependent on their relationships with other traders to clear their trades. And that can create problems for traders. Where if you're dealing with a broker that's fairly well established, they can handle it. They're not relying on second and third parties to clear their trades. The other thing is that I think that with a phone, just because you're dealing with like a smaller surface, got my phone here, a smaller surface area, I think it's easier to make a mistake placing an order. And the fact of the matter is, as far as we've come with phones, sometimes your service drops out, even in 2024,
Yeah, you're right.
And you don't want to be stuck with an open position that's going against you and you're having trouble, your battery dies, your
That's a very
service
good
cuts
point.
out. you know i I think I think having a phone can be a nice backup if something happens to, if you spill pop on your laptop, because that happens. I may have done it a time or two, but I still think you should think primarily about doing your trading on a bigger screen, which is going to be at a minimum a laptop. A lot of traders have multiple screens or have, one giant monitor so that they can really drill into what they're seeing on the charts.
Hmm.
And your phone's not going to do it for you, at
So
least not this year.
when it comes to currencies, I'm sure there are
Mhm,
many websites to go out and just look up,
mhm.
currency levels. Is there a certain website that you check every day? I mean, I was just at an event and a guy named Bridger Pennington was talking about how you want to see the buying power of the dollar, just go to a website called DXY or DWX or something like that. And I was like, wow, I never heard of that. So, is there a website or anything that you check? Whether, I mean, you're not in day trading,
Right.
right now, but is there anything that you have come across that they check on a consistent basis?
Awanda, OANDA, which is a brokerage firm that specializes in currency, but they have a lot of stuff on their site.
Got it. Owanda, and that's Owanda.
OANDA.
Oh, okay.
Yeah.
Wow, never heard of that either. That's a great tip.
Yeah.
I'm
But
sure
they're,
that's going to be fluctuating like crazy the closer we get to November. I'm thinking. That's what I believe.
yeah. but again, like you said, there's elections happening all over the world. So there's going to be fluctuations, depending on what you want to trade. Like if you want to trade the euro and the yen, or you want to trade the Mexican peso versus the Canadian dollar. There's a lot of stuff happening.
Hmm. And the
So
big thing in the news right now is DJT. Have you heard about this at all? Where it's
yes,
basically
yes, I have.
Trump's I mean, it's unbelievable what entrepreneurship in general, right? They kicked him off of Twitter. He created his own thing, and there's a holding process of 6 months. Now, still, if he only communicates on one platform and he's the leading candidate, it's only going to increase the demand of this. What's your thoughts on it? Do you believe it's something that is a that it's being talked about within the circles of this book?
I think it's maybe a security that has volatility, because there's obviously a lot of the principals can't sell for 6 months. You're right, but a lot of people who've bought in on the IPO can sell. And then I think that there's going to be like shifts in the media landscape, changes based on election news, changes based on Trump's court cases. So there might be, if you're talking about it from the perspective of a day trader, there might be volatility. Day traders love volatility.
Yeah, I would think so.
Yeah.
And
You
and I'm
don't
only
have to.
assuming I'm only assuming that the more the media or maybe the whatever it's the courts,
Mhm.
the more they talk about him and they want to see their response, it's going to only increase the worth of this app. It's unbelievable. Or this stock.
Yeah. But from the perspective of a day trader, you don't necessarily have to bet on whether long term it's a success or not. You just want volatility.
Got it.
You want opportunities in there to trade. So what you're looking for is something where there's noise, something where there's news, something where there's stuff happening. And then you can get in and look at the charts on the day that you're trading and look for your entry points and your exit points.
Yeah, they want steep ups or steep downs, right? Basically, they don't want gold, right? They're not looking for that where it's just a little
No,
bit, over the next 7 years. They
you
want
want up.
they want big swings, and I guess that's probably the personality of a day trader. Hey, where can
Mm-hmm,
I make the biggest return for the for the
mm-hmm.
for the smallest point of entry? That's
Right,
great.
right. So you want volatility and you want enough trading volume so that you can get in and get out without affecting the price much.
I bet these people just love crypto. I would think that they're just like they're getting into it because what when new cryptocurrency comes out, it spikes for what 3 or 4 days and it's gone,
Yeah,
or maybe one day.
right. Crypto is a really good asset for day traders. And a lot of it's because you don't have to make a bet on the long-term success. You shouldn't make a bet. You should just look at what you see in front of you.
Oh, yeah.
Right.
I'm gonna start looking at these currencies just so you know. So thanks so much for bringing that up. I'm going to Awanda and I got to look into this DXY or DWX, whatever you talked about. So that's
I
fascinating
think
stuff.
it's DWX.
DW. Okay, you've heard
I
of it?
think.
Good. All right.
But
DWX.
but yeah, I'm a little behind the curve here on that. So
So after the
embarrassed to
book came
say.
out, so since the book, we always preach to people, write books. When you are fascinated with a topic, write a book on it because it gives you authority,
Mhm.
credibility. Last question I have for you. What has this book done for you? Or the first book, even, I think it was on hedge funds.
Hedge funds for dummies. Um, they've been a lot, but well, I mean, just I love doing the research. I love writing. That's part of it. But I've been able to talk to some really interesting people. I've given a lot of presentations and speeches. Done a lot of interesting interviews. I've been on BBC. I actually, when the GameStop, when the meme stock game came up, I gave a long interview to BBC about that.
Wow.
So
We
I've
could probably
talked.
pull it up then easily, huh?
Yeah. Actually, there's a funny story. I was interviewed by CNN Asia, and a friend of mine was traveling to Australia, and he was like sitting in his hotel room fighting the jet lag. And so he had like the TV on in the background, like forcing himself to stay awake. And all of a sudden, he's like, I know that voice.
You're on CNN in Asia? What is going on? That had to be awesome. I would take
Yeah.
that screenshot. I would use it for the rest of my life for sure.
So that was a great story. But yeah, I've been able to do a lot of really interesting media. I've had access to each edition of the day trading book. I've had access to more people to talk about them, about their stories, and learn what they're doing. So, you know, and it's amazing when I look back on the difference between the first edition of Day Trading for Dummies and the fifth edition, how much has changed.
So yeah, you have to keep revamping it, I guess,
Hmm.
with new
Hmm.
information, right? Cryptocurrency.
Yeah.
When did the first one come out? Because I saw this one was 2020. Is that right?
No, this one, the fifth edition's 2024.
2024. So the first one came out in 2020 then.
No, the first one came out in 2013, I
Oh, okay.
believe.
So the one I pulled up and it just showed maybe I was looking at an older version then. Let me look at this.
Yeah, you might be looking at an older
Oh, I
version.
see. You did one in 2019, then 2020. So you're constantly upgrading it.
Right, right. And there's a lot of
Wow.
things that have changed. Like with the first edition, we spent a lot of time discussing commission issues, but now brokerage firms don't have commissions.
Wow. Okay. So
So
do you have a number on how many you've sold? Because I'm just looking at this. There has to be, you probably sold a lot then.
over 100,000 copies.
Yeah. Wow. We should have
Yeah.
led off with that stat, guys. 100,000 copies she sold with this. Incredible.
Hmm.
Well
Hmm.
done.
Hmm.
So is there a website or a social media channel people can find you on?
I have my website, which is annlogue.com, ANNLOGUE.com. I have a Substack called The Whatever Years, which is more about like people at the late stage of Generation X. So it's not so much about trading, but I do talk a lot about like retirement planning, culture, family stuff, caregiving, all that stuff. I'm on Threads right now as Annie Logue. I'm not on Twitter anymore. And I'm on LinkedIn.
Got it. Yes.
Mhm.
So why'd you get off of X? That seems like it would be perfect for what you're preaching. So
I was on it for a while. I didn't like the direction things were going in. I just like, you just, there's just certain, again, like there's just certain things that you need to manage to limit for yourself. And it was just going to take me in a bad place. So I'm like, you know
at
what?
least you know yourself then. Well, I just flew through Chicago last night and so you're still in Chicago, is that
I'm
right?
in Chicago. Yes, I am.
And I like how you say in your bio, Anne Logue rhymes with Vogue. So that's what
Yes.
basically make it easy on people. And
It,
you're easy to find on LinkedIn for sure. So guys,
mhm.
look her up, get her book or books. There are a few of them. And
Yes.
it's an honor to talk with you, Annie. Thanks so much for sharing your wisdom with us.
Well, thank you so much. Thank you for having me. I really enjoyed it.
Yeah, guys. And so if your personality matches that of which a day trader has, then pick up the book because if you can handle it, you can make a lot of money, or you can invest like a dead man. It comes down to your personality, whatever it
It
is.
really
So,
does. It really does.
all right, guys. Remember, $1 million book will lead to $1 million life.